Hello there, traders. This is Chris Keene from akeenpointofview.com. It was an interesting day to be a trader again. We had quite a bit of activity, and we also have a little bit more fireworks tomorrow with a non-farm payroll report that could give us the volatility that we're looking for to head into the end of the week. So let's jump right into it and take a look at what exactly happened with a few of the pairs. We're going to look at the EURUSD and the New Zealand USD because they're both contradictions in the actual overall trend. You can see that the EURUSD moved up last night to test the trend line resistance that had been moved, hit once, twice, but 3 times. But then after the ECB rate decision and the Bank of England both decided to remain sidelined, the pair didn't actually really do that much. It wasn't until 8:30 when we had the press conference by Draghi where we had the March drop in the euro. And what caused that is that Draghi hinted that possible further liquidity or basically interest rate cuts could be in the cards in the near future. This caused the euro to drop rather sharply. We broke through the strong resistance zone that we've been talking about all week between 130.20 and 130, and the pair moved all the way down past the 129.7 level to test the beginning of the fib range from the move higher at the 0.382, which comes in, let's just say, around 129.50. This level contained the price action, and it'll be interesting to see in the night how exactly we trade ahead of ECB. I would expect ahead of non-farm payroll slow trading, but if we do get any push back up towards the 130 area, we could see sellers reemerge for a push lower, ultimately looking for a push down and maybe the beginning of a new trend with a new trend to the downside. Now the non-farm payroll report is due tomorrow, where there's expectations for a reading of an addition of 90,000 jobs and the unemployment rate to stabilize around 7.9%. It's tricky at best to say how this would hit the markets, but you can say that probably the initial reaction to this news, there's always a chance that with non-farm payroll, the initial reaction is actually the wrong reaction, and the cross could jump back at you. So you need to wait a little bit until the dust settles and then follow the trend. But right now, I think as long as the pair of heads stays below the 130-130-20 level, the path of least resistance is to the downside in this pair. And the other pair we're just going to look at is the New Zealand USD, because you can see this pair after performing well last night after a data release, continued to move higher and did remain relatively unscathed towards compared to the other pairs with the downpull. You can see that the pair has moved up right now, though, to the top of its zone that the cross has traded in over the last few months, and during the week I was looking for moves between the 81 level and the 83 level, but it looks like we popped through that, and we did see we basically reversed right at the 83.50 level. Now if we get another push up to there, or if we get a risk-off move tomorrow after non-farm payroll, it could be a good move to go short this pair and looking for a push back down towards the 82, and then maybe even ultimately the 81 level, and you would have to have a stop above the 83.50 level, maybe like a 50 pip stop. It's up to you. Anyways, those are the 2 trades I'm looking at. Well, there are other trades. If you want to hear the complete version, we'll go through all the majors. You can sign up for a free week of the wake-up call. And today, because it's non-farm payroll tomorrow, and we did have a lot of ability, I'm going to make a special currency watch version for the traders. Sign up now for 1 week free. If not, enjoy the Euro, USD, and New Zealand USD analysis, and good luck trading. And remember to keep your trades keen and to play it safe.